Good day, fellow investors. Fiserv is down 47% over the last 5 days. And if you look at the longer term perspective, which is 10 months, we are down 72%. The 52-week high, 248, the low, 64, and we are at the low. This company is interesting to me because Seth Klarman, one of the best value investors out there, has owned this for a while, then he sold, and now he's back in with a Q2 2025 ownership, and perhaps he will increase it after the current 50% plunge. Because the stock is now back to 68, Seth Klarman owns it, owned it, so we have to see what's going on, whether this is a sentiment, emotional reaction from analysts, what is the value, no matter the volatility. I think it is a strategic buy for medium diversified portfolio. If we look at the company, I always use my assistant to just tell me what it is. Core banking system, it's the largest fintech company in the world. Probably if you paid something with a credit card, there's a good chance Fiserv handles the back end. So they create those fees. They have some new growing projects like Clover. They have businesses in Argentina. And why Klarman might have been interesting in this is essential fintech infrastructure, strong free cash flows, buybacks, low multiple compared to others, and now especially there might be a mispricing correction over time, growth, Argentina. Let's look at the numbers to see what has happened this quarter, why the huge drop, and whether that is or what kind of opportunity it is. If we look at the company, new CEO, everything new plans, new action plan, analysis of what went wrong, new management. So a lot of new things that really destabilize all the old analysis, and revenues up 5%, not 10, 11, 12. Earnings a little bit down, but still stable. Margins significantly down, 320 basis points. Free cash flow still there, so still 3 billion in free cash flow over the year. They made huge repurchases, and there is some debt, which is also something to think about. However, okay, what will happen next? Will this margin deterioration continue? Where we will see earnings in the future is the questions analysts and investors are asking themselves. Because the business is there, it has a strong position. Clover is growing well as expected, perhaps a little bit slower, but they have signed new deals with healthcare, treasury departments. So things are, let's say, stable, but not as great as one might think. They have increased their capital expenditures so that they, let's say, reposition themselves because they have been focused on short-term cash flows instead of long-term business because they wanted to push those buybacks. Argentina's contribution fluctuates with inflation and interest rates. This is interesting because they have had a huge contribution from Argentina with interest rates, which means that in case of an inflationary scenario that we'll discuss tomorrow, this might be also interesting from that perspective because the more money there is, the more inflation, the more money Fiserv makes. The issue here is that this growth was like this in the past, and now that you remove 10 percentage points, everything changes. It's not a growth stock anymore, it becomes a value stock. Now let's discuss this from a valuation perspective, the delta of the delta tool. When something changes in valuation, let's say earnings were 10, P ratio, I don't know, 25, and that is the stock price here, 238. And that is based on, I don't know, 14% expected growth going forward. When the expected growth isn't 14% but gets to 4, The P ratio then is not 25 anymore, gets to, in this case, 10. Earnings, let's say, just weaken a little bit from 10 to 8. P ratio 10 times 8 equals 80. So just these small changes in growth in this really changes the valuation of a business, the growth versus value perspective. Just an interesting thing to keep in mind when it comes to investing. But there are still the cash flows there, so there might still be value. There is the new, my client's chief executive officer. Everything is changing from the previous management, so he needs to adjust all those things that were done earlier. He is now focusing again on creating value to customers. There is this new leadership, everything new, and you have to see why the market has been shocked, because these were the Q2 performance outlooks that have now been completely lowered. Still positive, still cash flows, might be still value, but you can see here the changes between now and the previous situations. And when such shocks come, nobody knows what to do, and the result is this: a complete destruction of the stock price, negative sentiment, everything negative, and the stock is down. Now we have to look, okay, clear out the emotions, what's the value? And the best thing is to look at the conference call, listen a little bit to what the management has to say and what is the perception of the analysts. So growth and margin targets needs to be reset, so not 14% anymore, 5%, 8% maybe, but that changes, as I shown you, the valuation and everything. Fiserv medium target was 9 to 12%, highest inflation rates in Argentina. Maybe inflation will change down the road, but then we go to again lower targets and they can hit that. Excluding Argentina, growth rate was in the mid-single digits in those great years when the market was very, very exuberant. And deferring investments, cutting certain costs, improving margins in the short term. So new CEO and new strategy, changing strategy. We'll see later why they were so focused on the short term. Pursuing in-quarter results as opposed to building long-term relationship by prioritizing business that both meets our clients' needs and comes with high recurring revenue. This is a big change, this is a big shift. I hope it's not the reason that I'll tell you in a moment, but we'll see. As they say, Fiserv is not fundamentally broken. Everything works, just the expectations and, let's say, a little bit the strategy has changed. And one day they will again provide higher conviction guidance, but for now we don't know yet what kind it will be. Mid-single digit revenue growth, but now the question is, will you hit that? And then when it comes to questions, how long has this focus been there, short term, long term, over-earning, deferred investments, how long it will take, that's the key question, to reverse that and get back to double-digit EPS. And then the CEO says recalibrations, they want to first stabilize and then hope to get back to a new growth rate going forward. And also keep on the buybacks to increase that earnings per share growth. Questions, especially when something like that happens, what's really going on under the surface and what do you think that segment truly can be? So what's the question? You don't know what kind of surprises you might expect next quarter. They say they have completed their review, the learning has plateaued some times ago, so they are confident that such big shocks might not be again in the closet for next quarter, but again, margins for next quarter will be lower, which means all the projections again for 26 might be lower, and that might again hit the stock price. And you're getting the double whack in Q4. So on top of everything, there is still an expected bad Q4. And these are the projections now for Q4, and if that is projected into 26, we are not at $2 earnings, we are at 1.5 times 4. That's $6 earning per share for 26, which then gives me a P ratio of 12 compared to the stock price. And then the question is, will it grow in the future? Nobody knows at this moment in time. I cannot predict the future, but we can check what's going on. Revenues have been growing, first data acquisition, so really doing well there. Net income also growing, profitable growth, that's always what you look for. They have issued some shares to do the acquisitions, but they have been very aggressive on the buybacks, and that's a problem now, because if you are extremely aggressive on the buybacks, there is stock compensation, significant 10% of earnings, that's something. Cash from operations is positive, but if you are very aggressive on the buybacks, especially when the stock price is high, 5-6 billion, the stock price in that year, and now 7 billion, the stock price back then was 230, not 70. So a lot of value destruction here on that higher stock price. A little bit of that increases, which is something I don't like when it comes to buybacks, because it assumes growth forever and you never know when these shocks come. But we have to discuss the previous management. Frank Bisignano ducks 300 million, even more now that the stock is even lower, as he moved to Trump. And then just an article on Bloomberg, he agreed to resign from Fiserv and divest his stake, including everything, not paying taxes because he is going to the government. And you can see here, he completed his sale at 200, 160. Also, the company was doing strong buybacks here, and now the stock is here. So half of his wealth was saved, and now his salary is lower. But when these executives know that they will retire, this happened with General Electric Jeffrey Immelt, destroying the company practically just to get his incentive, his payout. I'm retiring, going to government, same thing. I want my 600 million. Let's put things that they look the best they can look, that I get my bonuses, that I get everything, and then the next CEO will deal with that. That's something very, very particular. I often get asked about the management's intentions. I didn't watch Fiserv earlier because it was too expensive, not for me. But you have to understand whether that incentive is aligned with your incentive. Most people are happy. Buybacks, stock up, everybody happy, I'm rich. But you need to grow not on buybacks, that's what I always keep mentioning, but on real business fundamentals, which now the new CEO is trying to change back to. But analysts have been shocked, impossible to sugarcoat earnings, and now everyone is downgrading the stock. We don't know what to think, we don't know what the valuation floor is anymore. This was the previous outlook, now we have an outlook of 8, but you see it's still growth, it's still fast growth, but even at 6, now it's a P ratio of 10 if they can keep on growing there. Management responses weren't convincing, what drove the steep change in revenue assessment, so nobody knows. Now that things are bad, now the downgrades come instead of being opposite. Let me show you this. So this was strong buys, everybody was projecting Fiserv as a strong buy. You can see their targets here. 250 was the average Wall Street target just 8 months ago, and then only after the stock crashes, they adjust their targets lower. Last week, only one analyst had a strong sell, everybody else had a strong buy, or hold, just 2 analysts. So everybody was buying, now everybody says, oh, hold, which is sell for Wall Street. Downgrade, it's not a growth company, that story ends, everything needs to be changed, and they will need to rebuild investor confidence. Magnitude of revisions surprised us. We believe it will take time for investor sentiment to turn positive, but exactly that. It will take time for investor sentiment to turn positive, and analysts, when that happens, and the stock price is not at 70, is at 120, then they will upgrade the target to 150. That's how it works. The example is clear in what happened last week and what they are doing now. And now, from a P ratio of 20, now a P ratio is 6 to 9 times forward 2026 earnings. Fair value range went from 250 to 50. So 200 destroyed. Analysts don't think about risk and reward, don't think about price. They're simply analysts. So they don't think, okay, lower price, lower risk, what am I buying, business value, things like that. Because if they talk about that, then they're usually fired doing something else. Can we know more than the analysts? The key question is it value no matter what, despite the emotional ego destruction that analysts had? Is this uncertainty or is this risk? Because I don't know whether earnings will be 6 or 8 or 10 or 5 next year. But earnings will likely be there. So it's not really risk, it's uncertainty. And Wall Street, again, doesn't know what is risk, doesn't know to differentiate between risk and uncertainty. And now that the stock is down 70%, downgrading from neutral to buy. But still, there is performance. Will it be 6? Will it be 10? I don't know. However, I know that things will stay volatile, and therefore, if we look at the free cash flow projected, that's a 12% yield. 12% yield. Compare that to the 1% yield of the S&P 500. This is getting interesting. When it comes to a buy, this has to be a strategic buy. We have to accept volatility. 7% yesterday, 45% down 2 days ago. So that's something you need to accept. How do you deal with that? You invest in stages. Maybe something here now, then if it drops again, but there is still value, you add a little bit more. You need to accept that volatility. And it looks like value is just emotional reactions. On that free cash flow, I have put it here for a 12% return. Let's say medium risk going forward, which makes it interesting. I'll update next week the quadrant so we can discuss more. Really accept if you buy something here and it's, I don't know, 20% down in the next quarter, that's something that happens. And that is exactly what we discussed in this video 2 days ago, extrapolation bias. Stellantis, terrible, destructive business because it's down 70%. The same thing analysts are now saying about Fiserv, while stocks that go up, they keep on going to the moon. The same things analysts have been saying about Fiserv 10 months ago. So if you buy, have a free step buy strategy and then small portfolio allocation, and maybe you will get that, I don't know, if you start with 3% and you make 3% of your portfolio, that's 100% return on this volatility and uncertainty, that's a good bonus to your diversified portfolio. Personally, I don't yet know enough about the business. I'll start following it here on YouTube, then maybe in a few months, if it's still interesting, write something for my research platform. And then when I know enough, when I'm sure, okay, this is absolute value, I might even buy it for my diversified portfolios. Perhaps over the next month, I'll see for the diversified portfolio already now. But just an initial research, the perspective here. I hope you enjoyed it. We keep following. You can check also my research platform for the things that I have that for now give me more confidence for the similar return than Fiserv. I'll see you in the next video.